every local depends of the data, depends of the goal of each region. You need to adapt, but you create your own risk assessment. We see also that there is increase of multi-hazard approach. I think it's not enough now. We are working a lot of multi-hazard, but we need to combine the different hazards, not working only isolated. For example, we have a wildfire, and then we have a rain, we will have more problems than only isolated a wildfire and a rain. So we need, it's more than the sum of the two. So we need to take this into account. Also, we saw that there is quite studies, quite risk assessment, including the climate change, and we have a lot of efforts to standardize the risk assessment and the methodology and the framework. But we saw also a lot of challenge. So one of the main challenges in the data scarcity and quality. We have a poor spatially explicit hazards values across the different studies or guidelines or so on. This is especially with historical data. We need to see what happened in the past to order to calibrate our models, to make decisions. We saw that we have this data scarcity. Also, we require to do a proper hazard modeling or risk assessment. We need extensive high resolution data sets. This is one of the main problems that we face that. Also, a fewer of a half existing students using risk insurance use to incorporate climate change scenarios. I think this is one of the main problems that we have. The insurance companies work year by year, so they don't have the urgency to work in climate change scenarios, but climate change scenarios will, and they have very clear this, will affect the sustainability of his business. So incorporate the climate change into the risk assessment. Maybe don't modify the pre-informed this year, but can vary the frame in a long term and also in the sustainability of the business and of the insurance company. So we see that an important lack of these climate change scenarios. So many insurers primarily rely on historical data analysis, and the historical data analysis in the future or now are one part of a risk assessment. We need to model and to see what happened if the variables changed from the past. There are limitations also to integrate advanced tools, and for sure, issues like the low customer retention rates impede the implementation and adaptation incentive programs for the insurance sector. So this is more or less the things that we found, and the things that we need to enhance data sharing, improve modeling sophistication, a stronger collaboration between public administrations and the insurance sectors. This is the main conclusions that maybe it's too obvious, but I think we need to remark and to see, okay, we are working in the right direction, but we need to work more, and we need to work together to understand what's happening and to have more and more data in order to predict, in order to planning, in order to implement adaptation measures. Then, well, for sure, this is the risk will hazard exposure, vulnerability, resilience that is in the middle of the union of the three things. And in this risk assessment guidelines, we present like a framework, more or less, what is the steps in order to develop a correct risk assessment. We have identified the hazards, we evaluate the intensity of the hazards with historical data and climate change scenarios, and we perform the hazard modeling. Here we need a lot of data, the data terrain, assets and buildings, infrastructure networks, land use maps. This information is more or less easy to find. The tricky question is when we go beyond the hazard to go to the risk, to evaluate the vulnerability. This is where the losses data that my colleague Luis will present the work. It's very, very important because with the losses data, we can create damage curves. Damage curves, I will explain later what is this. And with this, we can do economical risk assessment. But we need to do this economical risk assessment for a baseline scenario, but also for a business as usual scenario and for adaptation scenarios, for historical data and also for climate change scenarios to at the end compare these scenarios and to see the efficiency of the adaptation measures and the risk assessment. So finally, more or less, the damage curves. What is the damage curves? The damage curves are a tool that make a relation between the hazard and the cost of the cost of this hazard that produce the impact. So, for example, in flooding, we have a lot of damage curves in flooding. You can relate the depth of the flood with the cost, the damage of this hazard, and we can have these damage curves for every sector, every asset, every kind of asset, every region, and so on. These damage curves help us to create the spectral damage, that is a statistical value, but tell us how cost in damage we will have regarding this hazard. So it's very, very, very important. And to create these damage curves, we need losses data. Losses data that mostly have the insurance sector, but this we'll explain later. And to finish, climate change scenarios, I have explained it, is very, very important to include in our analysis, in our risk assessments, and to perform and to understand what can be happens. For sure, there is a lot of uncertainty. We can have a lot of models, we can have a lot of scenarios, but more than we implement, more than we know. So we can put different kinds of scenarios to find the middle. We will see the 19 percentile, but which more information we put into our risk assessment, better solutions we would have. Because at the end, models and risk assessment are all the risk assessment and all the models are wrong, but some of them are useful. The risk assessment is a tool that helps us to plan and to decide what to do. More information, we are close to the reality, but it's not reality. Risk assessment is a tool that helps us to take decisions. And conclusions, is more or less that I would say. Best practices, we have a very, very good framework. We have gaps and challenges, mainly in the insurance sectors, to try to go beyond a year-by-year basis, to try to include the climate change scenarios, to include the damage curves, to work together, the administration and the insurance sector, to create these damage curves by sectors and by regions, the role of the climate change, and for sure we need to collaborate, we need to work together, and to try to gather all this information. And then the floor is yours, Luis, in order to explain all the work done by losses data. One of the parts of the risk assessment that are very, very, very crucial.
Thank you very much, David. That was a good introduction to the risk assessment. Thank you. And one of our tasks in this project was to analyze how can we integrate this data at the European level. And what we see is that, well, it's not just merging the data. The data needs to be compared. And there is some challenges related with definitions. And for example, how significant an event should be to be considered as a natural hazard. And then we have some challenges also basically policies, where in some countries flash floods are considered as natural hazard, in others they don't. And then we have more technical challenges, where we see that data has unique formats, it varies between insurance companies, and we have challenges to get it with languages, currency, and so on. So we really thought there is a need that these data should be standardized. And for that, we have introduced what we call the so-called ontology. This might sound a bit technical, ontology, what is this? Well, you can think of it as an operation system for knowledge. So in this case, what we did is to connect different data sources to loss data from insurance companies. So at the top, we have data about the region, population, GDP, so on. This region has different assets, buildings, agricultural infrastructure. Some of these assets can suffer damage caused by natural hazard events. So we have information about buildings, agricultural land, and so on. We have information about natural hazards, type of hazards, and we have also information about the losses from insurance companies here. So everything is connected with explicit relationships. Uh, is it with the visual work? If I no, if you go back, no, you have to go back. Yeah, then click that. So if we have all data integrated, then it's quite easy to just analyze the data. So in this case, we have used data not from Norway to populate the ontology that we have seen, and then you can just ask, okay, give me the summary about municipalities with the most damage in Norway. And then what is happening here is that the AI is querying our database with information, and then you get the list. Okay, at the top we have Bergen with more than 3,000 damages, with the total repair cost of 81 million rupees. Then you have Stavanger, Kristiansand, and other municipalities. You can go even further and ask, okay, give me, the percentage of buildings damaged in each municipality. Again, the AI is querying the database, and we see that there's a municipality here. It's in the Lofoten Islands in Norway, with about 3% of buildings that were damaged by natural hazards. We can go even further and ask, okay, I want to get the results in a visual way. And give me a graph. Boom. Right, then you can see at the top, which is the municipality with most of the damages in terms of percentage, which is considered very high risk, and then be some that are high risk, moderate risk, and so on. So again, the message is there. If we have structured data, then it's quite straightforward to analyze it. And we have seen that in the dairy project, some of the regions, they have challenges getting access to knowledge, technical knowledge to analyze the data and do the risk assessment. So this will facilitate that work. And in addition to this, we have developed an interface prototype to visualize lost data. Again, here we have used also data from Norway. So we had access to 5 years of information for the whole Norway from all insurance companies, data at the asset level. Can you play the video here as well? So we can see how it works. Yeah. So at the top, we have the total compensation paid this period, the number of claims, and the average compensation per claim. And well, this is a very easy simulation. We can filter by other type here, by year. In this case, we just have the defunct rate is at TAT. And for each region, here it's at the county level in Norway. So if we go back and select other type, storm, then you can see that most of the damage, they are in the coastal area with a hotspot in Bergen. We can also look at accumulated compensation costs, drop time, where we can identify where are the biggest other events. So if you look at the storm, so that is grouped by storm here, you can see that in 2015 there was a big storm and with a big compensation as well. Paid by insurance companies. Then we can also look at the data by county, and we can see that this one here has many spots. So instead of looking at data per costs or compensation rates, we can also look at a number of sites. So we can see how these evolve throughout time. And so we have done a deeper analysis of the data as well, but this is just a small introduction. We have another view in the prototype where we go deeper in the analysis. To conclude, we have showed that successfully integrated fragmented insurance datasets to unified ontology-based knowledge graph. We had the stakeholders validating that, this linked data provided with ontology is essential for the infrastructure planning and risk assessment. We had, in fact, developed an ontology in collaboration with the Data Hub. So all the vocabulary and definitions that we used in ontology, they are aligned with the European Data Hub. And we also have used ontology to export data and share data with them for the Norwegian case. Well, we know that this is just a start. We are not considering, for example, in library costs in the project, so we can further develop. Yes, that is from my side. And yeah, just to mention everything that I mentioned, and you have more detailed information. It's available in our website. You can scan the QR code there, and you'll have access to the deliverables the website. Yeah. Because I'll take the floor is yours now.
Good morning, everyone. Morning. Okay, yeah, here we are. And so after explanations of Louis and Jesus, how we know that there is data, what can be done with this data, and what it can actually be achieved here. I'm going to take you through the problem, what we actually use at Mitigate, and one of the use cases in Soteria project that we had in Galbrobo, and in the end, the value that this brings to the project. We all know that climate change, of course, is the biggest issue, and flooding is one of the most significant catastrophes annually that brings a lot of losses worldwide. And it is going to actually increase by 5 times by just 2050. So annually, the insured losses in the global insured losses is 14 billion euros, while the economic losses are around 84 billion euros. So what happens here is that there is a need to reduce these losses, to minimize them, and use a preventive approach to do so. We need to support areas with proper risk mitigation, with effective risk mitigation, and we also need to assess this risk mitigation with innovative solutions that can be done basically anywhere in the world. It's one of the things that matters a lot here is also to keep in mind that we need to keep the insurance affordable for everyone, which is a problem everywhere. So what we do for this, Mitigate is a startup company that uses a lot of the data, as you can see, to prepare for mitigation of the hazard that is induced by flooding mainly. That's the focus of the company. We use climate data, we use building footprints, we use property boundary data, soil type. We use a lot of geospatial data, high resolution satellite images, nature-based solutions, and property flood resilience measures database to actually get from the exposure and hazard to calculate the loss that it induces, and then get to the next step, which is the mitigation of that loss and prevent the damages. In this work, we have a few assumptions that we make based on the climate data, the flood model, the data that is available, the building footprint, for instance, and the maximum flood depth. The models that we run is just a 20-year return period for those of you that are interested to know. So there comes some assumptions with these models in the end. It's modeling. We know the limitations and we know the assumptions that we make would create those limitations, but that's what modeling is about. And I think everyone here can actually confirm that. So some of these assumptions that we make is that, for instance, the rainfall that we take into consideration, we assume that it actually falls in the one day simultaneously. So the whole amount of rainfall is simultaneously. We only assume the surface flow, and we ignore if there is sewage system. And the flood depth that we consider is basically based on the nearest blue spot that there is close to the basin that we take. And in Soteria, there are multiple case studies and regions that are in the project, but for us, we focused mainly on two of these regions that are urban and have property scale risk. One of them is Gabrovo that I will talk about right now, and then we also worked on Valencia, in another region of Soteria that the data is available on the website if you want to have a look at. What we received in Gabrovo, what was quite interesting for us was that the municipality provided this data for us. So we had a DEM, high resolution, 1 meter, and high resolution aerial images, the building footprints, property outlines, and this data was available in the municipality of Gabrovo. And what was done with this data was to maybe do some risk assessment, but what can be done after that is a question, because there is not enough expertise in every municipality worldwide. So this data has to be put in use, and this is actually what we managed to do in Gabrovo. This is a look of what our web app currently looks, and what you can actually do is that you can look for any property in Gabrovo. You can put in an address, the latitude and longitude, and then it takes you to the property level information that you can get, where you can see actually where the property is. You can see what the risk to that property is. We introduced 4 different types of risk based on the surface water flood, which has their own definitions, and I don't want to get into too much detail there to bore you with, but those are the levels of the risk that you can get, and based on those risks, you can actually receive a set of measures that can help you reduce those risks, mitigate those risks in every single property. These solutions come with their efficiency and how much they are effective to reduce the level of the risk. They come with their cost and the size of the solutions in every individual property. What was used in Gabrovo was the reports that we actually produced. So what you can actually receive is a set of a report that can bring you, again, the levels of the risk that you have in every individual property, and the description of it. For instance, the inundation risk, which is basically based on the amount of the water that is accumulated close to a building. And what was interesting is that we know from the customers and we know from Gabrovo that why these reports were interesting was that they are based on the information that people can actually see in their own property. You can see where the water is accumulated. You can see where the water is actually flowing when there is a rainfall. And that would make it a little bit more trustable for people to actually think about, okay, so I know what is the risk that there is. Now, what can I do? So the answer is you can have a list of solutions to help you reduce those risks in both, as I mentioned before, we have a database of NBS, natural-based solutions, and we also have the PFRs, which are property flow resilience measures or gray measures. So we have a database of both green and gray measures to help reduce those risks in every individual property, as you can see. The reports also include an explanation of every one of these solutions, like you can see their pictures, how they are, how difficult they are to actually keep, how effective they are, how much it would cost how much it would cost in every individual property. This is not a solution for one. There is no solution for one. It's solution per individual property. So what it brings actually is that what we want everyone to know is that every euro that you spend in prevention, it actually creates more efficiency, more capital efficiency. It brings you the long-term loss reduction. It brings you retention after there is a loss and a claim. And it also increases the return on investment that you have made in long term. I think that's where I can conclude. If you have any questions, I will be very happy to answer. And same goes, we thought that we would keep the questions for the end of the session of the three of us so that it could be easier for everyone to ask questions.